So as you can see here, this was our last highs. Okay, this was our last high. Market last high, and this was our last low. So, and all the minor structure between this last high and last low, lower highs, lower lows, lower highs. People are getting lower lows, lower highs, and again lower lows. So after making this last low, what price did? Price has gone reversed, and like see high, lower highs, lower lows, lower highs, then again lower lows, lower highs, lower lows, lower highs, this lower low, lower high, then lower low, lower high, then again this lower low, lower high, and this was our last low. So price has just taken out this last lower low, and it calls as a minor BMS. Okay, so what I'm expecting now here is to price come to this last bullish order block. Like I will just zoom it. Okay. You see this last order block. Let's go on 30 minutes. This was the last candle which is responsible for this minor BMS, and we have big fair value gap. What fair value gap is, I will explain that as well, but just now you can just see like gap between this candle and this wick. We have this fair value gap. The gap. This we have this big imbalance here. So that's what I call a fair value gap. We have this fair value gap. Price has never came down to mitigate that block yet. So this is what I'm expecting price to do, like come here and mitigate this block and then go bullish again. And this was our last, this was our minor structure. Minor structure is the lower low, lower highs, lower lows, lower highs, then again lower lows, lower highs.
When the price is created a lower low, right? I mean, it has bottomed up at the OB, right?
Yeah.
You marked the zone as minor BMS, right? But if you see before the zone, it has also created a minor BMS before it. But the continuation didn't happen. So, like when
where can you please this one?
Yeah. No, above this.
Yeah, this one, right?
Left. Yeah. This one.
Yeah. See, this was our consolidation range. Like, you know, consolidation ranging market.
Right.
So I don't consider that as a structure. I just consider as a liquidity. And this will be our swing high, swing low, lower high, lower lows, lower highs, lower lows. And this was our lower highs. You see, prices mitigated this last order block, and price did this minor weak in market structure here. I mitigated this block and then again gone down.
Okay.
You see, like prices already mitigated this zone. So price has never mitigated this one, this block. So price came again, hit out this block, then again came down. So it's all about the like structure between these, but I won't consider this as a structure. This is just a minor liquidity. This is not a swing high or swing low.
Correct.
You understand what I'm trying to say? Like this, I won't call this as a swing high or swing low. This is just a ranging market for me.
Yeah, this is a ranging consolidation.
Yeah, this is also a ranging market for me. For making a swing high or swing low, price has to break a major structure. Like if this created this high, then this will be our low. And if price has taken out this high, then I will call this as a higher high, then this low. Then break again the high, then higher high, higher low. So that's I will explain
Then
on chart as well. Yeah,
this price has
say.
made major PMS, but we are looking for confirmation at filling the fair value gap.
Yeah, like price has before going off, price has left small fair value gap on 30-minute time frame. And this was the candle which is never mitigated. Mitigated means there is no any formation happened. Like price has never came down to mitigate this, touch this last bullish candle, bullish order block for buys. So I'm expecting this to happen to come and fill this fair value gap, so we can look for buys here. But I won't like what I will expect here. Like price coming here, then make swing high, swing low, then this, then again breaking
So
market structure, and then
we
again.
can trade this GBP USD on both ways, right? First is a
Yeah,
bearish, but
yeah,
since we don't have any bearish confirmation yet,
yeah.
right?
So time frame difference,
So we will
that's what
just
we call as a time frame difference.
okay.
Like you will see uh, another structure in 1 minute, 2 minute, 3 minute. Like if price will be bullish for you in 1 minute, but it will be bearish for you in 2 minutes. So that's
Right.
what happened. Like price is making lower low, lower highs, lower lows, lower highs, lower lows. And this last low has taken out this last lower high. You see this lower low, lower highs, lower lows, lower highs. And this last low has taken out this last lower high. So this will be our minor BMS. So what I will do next is I will just mark this candle which has mitigated this demand zone, and I will look for buys in here.
So we will
Okay.
look for buys after creating a minor BMS, right?
Yeah, just
Or,
after confirmation.
or okay.
This
You need
minor BMS,
another confirmation, right?
yeah, this minor BMS shows us like price is reacting from this zone. So what people do, people have sell limit orders in here and look for sells, but price come again, give a small retracement, then again boom down towards the last low. So that's why confirmation is important. So we will have a BMS. Okay, this is stop hunt. This is also called as a stop hunt. Price has made high, then again low, and this lows just to mitigate. Like people would have bought here. Okay, people would have bought here, and price came down again and taken out their stop losses, and then again given a minor BMS. So what we have here is we have first stop hunt, then again we have after making this stop hunt we have minor BMS. So we have BMS. Then what I will wait for next is RTO. Like what RTO? Return to origin. Like though the order block or the block which is responsible for this minor BMS. So that's what we call as a RTO, return to origin.
Oh, can I ask you something?
Yeah, sure.
So like here, like when it goes, say, oh, I'm annotating it right now, and then it does like this minor break in market structure. If it taps into like a level that's in here, because sometimes I'll hesitate, like if it taps into a level that's in here, and then because sometimes they'll play out. Like say this is a level that ran like major liquidity, then I'll just wait it out. But if it's not, sometimes I'll kind of hesitate because I don't know whether or not it's gonna go lower, like from this internal supply zone that's following structure, or it's gonna go and make a new high. So like, how do you usually play like those types of scenarios?
Okay, so what I do is like if price make a stop hunt, mother BMS, then RTO. Then again, if price, this is our last supply zone. Okay. If price breaks out this last high, I will go break even that time, and I will close 50% of my trade, and I will have my eyes around that block as well, because that block also was responsible for the break. Same thing I will look here. We have a stop hunt, BMS, then again RTO thing. So that's where I will look for entry again. But what happened most of the time, like this is our higher time frame last low, and this is our higher time frame last high. So most of the time what happened is price, if price do something like this stop hunt BMS RTO, most of the time what happens is price takes out all these areas first before dumping again. So that can be used as a swing trade as well. But you can, what you can do is you can go for break even just after taking out this last high. Like you will get easily something like 1:3, 1:4, and then you can go break even. But on here, we just broken out this minor BMS. So my structure is bias is fully bullish. So I won't look for sells. I will look for some sort of buys around this area. I won't look for sells here. I will look for buys around that area. Like there might be some kind of bullish order block here, which has left some sort of imbalance. So that's where I will look for buys again. Hope you understand what I'm trying to explain. Hello?
Yeah, that makes sense.
Anything happen, it's all about probability. So just what we can do is we can just try our best. So that's what I do. Like one cards like see marking this. So you guys understand when I'm trying to mark out like major BMS and when minor BMS happening. So this is also minor BMS. I call this as a minor BMS, but price has taken out these lows as well. This was our last swing low. Sorry, this was our last swing low. So we are major BMS happened, and this is our minor BMS. Okay, so if price can come again, this is our last swing low. This is our last swing high. And these structure we have. So price has taken out this last swing high. So we have minor BMS, and if price has taken out this last high, so we will have a major BMS. So that's what I see. And all this swing low, swing high, swing low, swing high, swing low, swing high, I see this as a internal liquidity areas. So what market do is market always come in here and take out these all in the internal liquidity for any sort of move. Okay, so let's go again. I will explaining two things. I call this as a low resistance liquidity run. So what exactly liquidity run is? There are two type of liquidity run. Hrlr, high resistance liquidity run, and low resistance liquidity run. So we have this. So when I will call this market as a high resistance liquidity run, like if price is making the high, then low, and then make another high, then low. Sorry, high, low, then make another high, then again low. So I will call this as a high resistance liquidity run. And same thing for bearish trend, lower lows, lower highs, then lower lows, then lower highs. I call this as a high resistance liquidity run. Okay, so let's go. I'll explain this here. Like price is making some sort of bullish move. Okay, so this is some kind of example. This is our high time frame supply zone. So what I look for when I look for higher resistance liquidity run, like if price is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, then again higher high and higher low, then again this high, then this low. So I will call this as a high resistance liquidity run, and then we have a minor BMS. That block which was responsible for the high resistance liquidity run, that block will be our point of interest for sales. Okay, and for buys moves we have this last point of interest. What market will do is come here, make high, then low, then again high. So we have again high resistance liquidity run. Then this candle was responsible for high resistance liquidity run, and this will be our point of interest for buys. And I look for buys around here, this block. So that will be our high resistance liquidity run. I hope you understand. If I have any question, they can ask regarding high resistance liquidity run. Hello?
I think so far so good though.
Yeah.
Yep. Okay. So let's go on. Low resistance liquidity run. Price make highs, then lows, then again high, then again low. So that's when I will call this as a low resistance liquidity run. Okay. And same thing for this was for sales move, and this will be for buys move. Highs, sorry, low and high, then lower, lower high, lower low, lower high. Yeah. So that will be your low resistance liquidity run. Okay. So for example, I'll go example in here. Like price making some sort of, this was our last low. Okay. This is our last supply zone. All these little lows our internal liquidity. So what price can do is price can come here and this, then again this. So this is our low resistance liquidity run, and at that time this will be your point of interest for buys. Okay. So yeah. So why this high resistance liquidity run and low resistance liquidity run? Like what I see is in high resistance liquidity run, that block which is responsible for making the high resistance liquidity run and breaking in market structure. So that block will be our point of interest. So in this high resistance liquidity run, we have this high. This high was responsible for this high resistance liquidity run and minor breaking market structure. So that will be your point of interest for sales. Okay. And for buys, yeah. And so you see this block was responsible for the high resistance liquidity run and the minor breaking market structure. So that block, we will call this as a point of interest and we will look for buys here. Okay, so always look for that block which is responsible for minor breaking market structure and look for buys around. Okay, so yeah, and in case of low resistance liquidity run, so you see this block hit it and this made a so let's move. Okay, explain here. Low resistance liquidity run, like price came in here and made this high, this low, then again low, and then again taken out this low. So you see this is low resistance liquidity. Why this low resistance liquidity? Because that block is responsible for this minor breaking market structure. So that will be your point of interest for buys. Like price which is failed to make another low, like this failed to make low, but this did a minor breaking market structure. So that will be your point of interest. People also call this as a SMS, shift in market structure. So yeah, that is what we use as a high resistance liquidity run, low resistance liquidity run. High resistance liquidity run means the high which is responsible for the break in market structure. So we will look for that high as a point of interest, and low resistance liquidity run, the low which is responsible for the break in market structure. So that will be your point of interest. So that was just the difference between high resistance liquidity run and low resistance liquidity run. So that's it. This is the example of high resistance liquidity run. And I will make So this is our low resistance liquidity. Same thing. So if anyone have doubt, they can ask me a question. Did anyone have doubt? Hello?
No, yeah, this looks all good to me so far.
So you guys understand
All
like
good, mate.
how to see like high resistance liquidity and low resistance liquidity. Okay, so let's go on charts. I think I should take a screenshot here. You guys know these high resistance liquidity run and low resistance liquidity run are the most important thing for entry purpose. You guys thinking like this is just a basic, but this is not a basic thing. This is what a good smart money trader use as a point of interest, because in case of high resistance liquidity run, you see price made high, then lows, then again made highs, and this high was responsible for this break below these lows. So that will be our point of interest. Okay. And in case this bullish move, this high, this low, then lower high, lower low. This lower highs was responsible for this break in market structure. So that what I call, that's where I see for buys. Like I will look for, in case here, I will look for buys around here. I will look for sells around here. So hope you guys understand. In case of low resistance liquidity run, what I do is like price made high, then low, then lower low, and this lower low take note this last low. So we have a minor break in market structure here. So this block was responsible for this break in market structure. So that will be your point of interest, and that's where I will look for sells. Yeah, so that's what I do. And seeing
I was
these,
gonna ask.
yeah, sorry.
Oh yeah, I was gonna ask like in this case, when do you distinguish like a low resistance liquidity run POI from like normal like trend line liquidity when you're like hoping for it to get FU'd and then make the move? So like when do you like distinguishing, you're like, oh, this one is gonna get like ran, but this one is gonna act as my POI, or maybe it'll like make more sense like on the charts. But yeah, if you could explain that.
Yeah, so for instance here, like this low has taken out this low, but we will have some sort of sponsor candle or bullish order block here. But what you can do is you can just check here on lowest time frame. There will be no sort of imbalance. Like if there is imbalance, so we will pick up this as a point of interest. Okay, but if there will be no imbalance and this block has already filled the imbalance, so that's when we will choose this as a point of interest. Understand?
Yeah.
Like if there will be some sort of imbalance here and price didn't got there to fill that imbalance, so I will consider that block as a point of interest of mine, because market always look for imbalance. So that's what I will do. So guys, should we end in here, or you guys have any question, just feel free to ask. Don't hesitate in anything. Or we could just close in here. So what you can do is that just you mark those things on charts and send it to in groups. So that's is the main thing you can just learn. Like see, this was, I'm just explaining example. This will not a, this can be not a good example, but let's see. This is our 4-hour time frame. Okay, price has come here. This was we choose this candle, this bullish candle as our point of interest. Price came here, then drop, then came again here. But what happened here is price didn't fill the imbalance between those zones. So price has filled the imbalance above 50% level. Okay, that's when high resistance, that's what we call as a high resistance liquidity. Okay, and we have this as a low resistance liquidity. Why this as a low resistance liquidity? Because price has failed to make take out this low again. So I will call this as a low resistance liquidity. So you see price came again around that low resistance liquidity, and this was the last block here, which had some sort of imbalance. Like you see this imbalance here, and then dumped in, then again buy. But you see this block has failed, so we can also take this as a point of interest because this block was responsible for this minor break in market structure, minor BMS, and this block, this bullish move was responsible for this minor break in market structure. Right? Like this was swing high, swing low, then swing high, this swing low. So that's when I will call this as a minor BMS, and this was our low resistance liquidity run, and this was the order block, which is not mitigated here. So that's how we use high resistance liquidity run and low resistance liquidity run for point of interest refinement. So let's just end in here, and if you have any question, you can ask me. So please, or else should just close here. Okay.
Yeah, I think
Yes, please ask.
no, yeah, I think I was just saying, yeah, I think I'm gonna try to backtest because I think the high resistance liquidity run is what I usually use, but low resistance liquidity run, like I'm not used to using as much, so I'll definitely try to look into that more.
Yeah, please, these things work, like these things work, and probably you will see people marking this as not as a low resistance liquidity. They are seeing this as a marking as a shift market structure. You have seen those things, and people call this as a stop hunt. Sorry. Stop hunt. So high resistance liquidity run can also be a stop hunt, and low resistance liquidity run can also be a shift in market structure. Okay.
So I have a question. Yeah.
Yeah, please.
Now, yeah. So we are taking this block, right, which is this one, correct? Yeah. Okay. Now, why not? Why not it go like this and for this block, for example, okay, or why it doesn't come here? Now, why do we? I mean, do we at each of these places do we wait for it, or because maybe from here if it goes, it might be some pattern, right? It can go here and then come down. So how do we know that it's going to? We have to take a shot here rather than wait for the next level. You got my question?
I got it.
Okay.
Like what we can do is we can just mark our high time frame point of interest, like those base area. Like we have rally, base, then again rally, base, then rally, base. So what we can do is we can just mark those zones as a point of interest, like these zones as a point of interest. Then if and we will look for that zones to as a stop hunt, we call as a low resistance liquidity run. then break in market structure. So we have this high resistance liquidity, and that's where we will call this look for buys. If that will not happen, like if price not take out the previous highs or lows, and if that will not do a minor break in market structure, so we will not enter it there. So price can come again here as well, and it can make a high resistance liquidity run and give a minor break in market structure. Then this block will be valid for taking buys. So we can look for buys around here, then again. So what we do is we can just mark our point of interest, like here. Let's see on daily time frame. So,
Okay.
yeah. So this is the base. Okay. This is the last rally, base rally. So we can just mark this rally as well. Okay. We have this rally, base rally. So we can just mark this rally as well as a point of interest. So you drop, base, drop, base, drop. So you see this rally, we have some sort of imbalance, like this candle didn't came to fill this gap. So we have this some sort of imbalance in here. Okay, so that's why I will select this as a point of interest, because this will be my like reasonable good point of interest for sells, and not this one, because we have no fair value gap in here. We have no fair value gap in here on this daily time frame. So this can happen here, like price can just come here, make a high resistance liquidity and drop high resistance liquidity and drop, and price can do this as well, low resistance liquidity and drop. So that's what I do. Like I just mark all those rally, all those bases which is responsible for break in market.